Hello everyone. We've had some feedback from our clients about a little bit more information to do with how one should, as a business owner, communicate with their bank during challenging times, but also during times of growth and development. These factors that we're about to discuss in a two-part series of videos are important to consider when communicating with your banker or a financier, whether they be an equity financier or a debt financier. The first part, we're going to focus on the profit and loss of a business, your business, and the key factors to talk about. However, up front, I talk about the king, queen, and ace when it comes to communicating with a financier. The king is provide up-to-date information. Can't go past that. The queen is open, transparent communications. And the ace, adding that together, is try and do that ahead of the curve. In other words, manage expectations. Don't leave the communication too late. So part one, let's focus on the profit and loss. Remember, when we're looking at a profit and loss of a business, there are a few key factors. Firstly, it's the overall outcome. Secondly, it's revenue. Third, cost of goods and margin. And fourth, overhead expenses. If you're thinking about your overall outcome, then ensure you have your latest set of accounts. And that's the latest set of accounts year to date for the last month just gone. And they don't need to be accountants' financials, management accounts are fine, but showing your performance relative to budget if you have one, if you don't, just simple actual performance. Month by month is ideal. Then to go alongside that, we like to see trailing 12 months profit and loss performance, because that's a bit of an indicator of how you're going on a run rate sense over the last 12 months. Really important to get a good grasp of what the revenue is now, but then to be able to give your financier a feel for what's it tracking in the next 3 months and also in the next 6 months. And importantly there, scenarios are a useful way of indicating how things are tracking. So at a base level, we expect this amount of revenue in the next 3 months. On an optimistic case, if X, Y, and Z were to happen, we would expect a different level of revenue. And on a pessimistic case, because of downside risks such as certain things that you might have impacting your business internally or externally in the market, we'd expect this amount of revenue. So give guidance around the revenue track and how it's looking moving forward. Moving down to the cost of goods and margin. Here it's really important to give the financier a feel for what are the pressures you're seeing in terms of the purchases you're making to deliver the products and services that you're selling. So is there margin pressure in the market? Or in fact, is it the reverse? Are you able to increase your margin given the current conditions? Then moving down to overheads. Here we want to think about how are overheads tracking relative to budget, relative to last financial year? Are there any opportunities for savings? Are there any opportunities you're exploring in terms of variabilising some of those overhead costs? So a simple feel for your overheads and how they're tracking and how they might impact the bottom line result. So really that's the end of part one. In part two of this series, we'll move on to working capital, which is another key element that's important for you in running the business, but also important for a financier to get a feel for in terms of your position.